Good morning and welcome to Damstra Holdings presentation as a part of the NWR Small Cap Virtual Conference. Damstra is an Australian-based provider of integrated workplace management solutions to multiple industry segments across the globe. The company develops, sells and implements integrated hardware and SaaS solutions in industries where compliance and safety are of the utmost importance. These solutions assist Damstra's clients to better track, manage and protect their staff, contractors and their organisations, and to reduce the risks associated with worker health, safety and regulatory compliance. Damstra is acquiring Vault Intelligence to create a larger, more diversified workplace management company with an expanded and highly complementary product range. Joining us today from Damstra is the company's Executive Chairman, Johannes. Just a reminder for those attendees to submit your questions through the Q&A box down the bottom. Jan, thanks again for joining us today. I'll hand it over to you.
Morning, everyone. Everyone sees my name is Johannes, but everyone calls me Jan for short. And thanks for spending some time with me this morning. I think I would know a number of the investors, shareholders, or hopefully new shareholders of Damstra, but no doubt there'd be some Vault shareholders also. We'll walk through the slide pack. I have about 20 slides, but I'll focus on half a dozen, but we'll get through this slide pack in 15 to 20 minutes. So we'll go to slide 4, go past the disclaimers. I'll talk a little bit about Damstra. I'll talk about our recent performance and the drivers for FY21. I'll talk also about the combined group, and that's about Vault and Damstra coming together. And then I'll briefly touch on our M&A story and journey. I will say something for us. This year's been a transformational year, and I think our performance has shown that. The people that have looked at our past quarterlies and also our recent 4C, but also the exciting next 12 months looking to complete the Vault transaction in October. I will start. I mean, it is a tough time in Victoria. Victoria is only a small part of our business, and most of the people that know Damstra know that we focus in Victoria, particularly in construction. I will say that we don't focus on residential construction or office blocks. We're more in infrastructure constructions, and I did get some of my team to send me a list of projects we're working at the moment. I mean, projects are working on a Westgate Tunnel, the Ring Road, level crossings, Department of Main Roads, and also some prisons. Because our business model is one where we charge upfront an annual license fee per user, plus 20% of our revenue is actually hardware. So while there may be a lockdown in Victoria for 6 weeks, it will have minimal or no effect to our business in the short term and longer term. And even those projects I've listed, as you can see, are long-term infrastructure projects. And I did get reminded by one of my team last night that a couple of those projects have just ordered a fever detection, a new product which has facial recognition and fever detection, which is integrated into our core database. So that shows you where those projects are going towards. I will go to slide 4. This is a combined footprint. So I've taken the liberty of trying to paint a picture for shareholders of when Vault and ourselves come together. Where are we, how big are we, and where we're playing. Christian and my vision for the business is creating an Australian SaaS-based company that becomes global. At present, 25% of our revenue is global, and when we do Vault, we'll actually expand that footprint. Our product is sold in and used in 11 countries around the world. We have offices obviously across Australia, offices in New Zealand. With Vault, we'll also have offices in Singapore and Hong Kong, and we have offices in London and the UK. When we're combined, we'll have some reasonable scale, 500 plus clients. We'll have in excess of 500,000 users and in excess of 200 employees. I think a couple of key metrics when people look at SaaS companies, there's a few things, what is the recurring revenue? Damstra and Vault have similar recurring revenue profile in excess of 90%. And most of our larger clients have contracts of between 3 and 5 years. So that underpins our natural revenue, and obviously we look for growth. Another thing is R&D. I mean, we'll have in excess of 70 staff, and that just demonstrates the continual investment that we'll make into our product and continual innovation that we have. If I had to say Strategically, we have 25% of our revenue international. That will be a real push for us in FY21 and FY22 in particular, particularly in North America, where we've already got some good clients, Newmont and some ones we won recently. We've got some small trials happening in the UK in the construction space. And then we see a footprint, especially in Singapore and Hong Kong. We actually already have clients in Hong Kong, CLP, Singapore, Volt has M1 and a Keppel, and we also have clients in the Philippines. So this is really about an Australian company going global. Going to the next slide, people ask me what Damstra does, and I will say, when you're a SaaS-based company and you're in my role, it's about product. We put our product into 5 verticals. One is workforce management, and this is all about the individual worker. Are they verified? Has all the documentation been uploaded on the database? Is their time and attendance? We store all that individual data for every one of our users, and that information then can be overlaid with the time and attendance and also fatigue management. We have access control. That's also part of our business, where someone has all the workforce management verification data. And for a lot of our clients, how do they get into a work site or a mine site? A number of our clients want hardware fully integrated into the software, that if the worker hasn't got their qualifications, they can't get in. And that hardware also plays a role in terms of what time the worker went into the site and what time they left into the site. And that whole access control with COVID and compliance and tracking is a big area for us. We also do asset tracking for a number of our clients, where you can say, do you have a small vehicle? Do you have heavy industrial products on site? We actually treat assets like people. Have they been verified? Have they been maintained? Can a worker actually use that particular asset? We also have learning management. Learning management is important because for workers to work on a site or in any operations, have they been trained? And the key factor of where our differentiation is, there's lots of LMS systems out there, but do the training course, pass the training course, and the database is actually updated. If you haven't done the training course, when you go to site, it will alert yourself and alert the client, but you haven't done the training course and you can't actually access the site. The other big component for us is HSE and compliant management, how people use forms on site, how they're managed on site, and how that data is recorded. If I go to the next slide, this really then breaks us down. We'll talk about product and talked about modules. What are we? We're about innovating in terms of what we do. So in FY20, we've added 14 different types of modules, and I will call a couple. So I'll call out access control. Access control with COVID, obviously fever detection, you're at 36.2 degrees. A lot of people are looking at how you use a camera and how you measure cameras. So we now have developed a product which a number of our clients are presently using, trialing and rolling out, where we have a facial recognition and a temperature device which takes the temperature and the facial recognition and is integrated into access control. So it's just not a camera. You can always buy a camera, but the issue is it's time recorded and date stamped, and then that's actually recorded. We had one of our clients recently who's rolled this product out, and the reason they liked it was they said to us, isn't it great? I don't have to have someone standing next to the camera writing John Smith down, temperature 36.2 at 8:50 in the morning. So this seamlessly works back into the core database. Another interesting product in the workforce management area is the RFID solution for one of our clients in New South Wales, actually Cubed Intermodal project. They wanted to monitor vehicles and also people by an RFID solution in terms of how they're going on the site, how they're moving around the site, and how they're accessing the site. And all that information now is done via an RFID solution, which once again is locked, tracked, and can be analysed going forward. The other one, which excites us, is digital forms. We you know, you may be a worker on site, you have your qualifications, you've got into the site, and you have to do forms. There are a lot of form products there. We have one client, as an example, who's presently trialling at one location. They're removing, and I'll give you a size of scale of this. At this one location, they have 50 people doing 50,000 forms a month. So we're presently in trial phase with that particular solution. And if that trial is successful, which we believe it will be, we'll roll that across the network. But the power of the form, once again, goes back to the core database of workforce management, where you have the individual, he's been verified, you know who he is or her, they access the site in and out. That person may be allocated to do 2 or 3 forms a day. That form's done by that person. That may go to their supervisor. Yes, it's done. And all that is logged, can be analysed and can be tracked. And obviously moving forms out of the workplace and the digitisation is critical for where organisations are going into the future. So I'm spending a bit of time on product because I think part of our journey is explaining to our investors and also our clients what our products actually do and how they work together. And then this is a slide, and you know, one of my team has spent a lot of time working at it. It's that visualization. There's a little girl and a guy going on the site. It's all about them being registered. Then they can work on a site. Like I said before, access control, learning management, HSE control, and then a key component in the bottom right-hand corner was about the analytics. We have a lot of our data now over a period of time when we have, you know, 500,000 users. Certain clients may have thousands and thousands of users where they want to know where has that individual been, what are the qualifications, how often have they been at the site, when have they left the site, and that's the power of what we can bring to our clients. I will talk about something which is a DNA for us at Damstra and also for Volt, is privacy and security. We have an enormous amount of data, and it's something that we talk about at board meetings and management meetings and with our clients, and that's something we spend an inordinate amount of time with, especially when you've got clients like Newmont, Glencore, John Holland, NBN, one of our key clients, where privacy and security is utmost in terms of a table stake. So a lot of people have ISO. I think we as a company have taken accreditation to a certain level. We got HIPAA compliance in the States. We got NHTSA compliance, and also compliance SOC 2. SOC 2 is a requirement, particularly in North America, internationally, that you need to have, and basically it's an accelerated or higher level of ISO accreditation. It's something we've now got compliance on, and something we're continually managing that level of compliance for our business. The next slide, which is slide 9, and you know, people say to us, you have all these modules, you have all these products, and they can work in a standalone basis, or they can work in an integrated sense. And one of the things which differentiates us with our competitors is how we integrate. So we can integrate all those modules that I spoke to you earlier about, you know, access control, workforce management, learning management, HSE, and we do that via API layers and into varying devices. So you can see the litany of API integrations that we've done as an organisation, names that all of you would know, be it Tech1, be it SAP, be it Kronos, be it Tableau, be it Exargo, etc. So that's something that we pride ourselves in terms of differentiating ourselves versus competitors, in particular smaller competitors. What we're seeing is our clients are asking us, and there is always a great single point solution for any business looking to solve a problem. And what we say to our clients is we have multiple modules in the workplace management area, and then we can integrate into their functions, integrate to other packages they have, and integrate back into our systems, integrate into their ERP systems. And that's something we really pride ourselves on. So if I leave the messages, one is a product suite. We'll continue to invest. Privacy and security is critical for us as an organisation, and how we integrate our products into one, and how our product integrates with clients' products or other products that they actually may be using. I'll touch on Damstra's quarterly activity. I won't spend a lot of time on that because we did publish it. I mean, we were very proud of our results last year, and our revenue has grown. As you can see, the numbers there. We've made obviously a good EBITDA. Obviously, these are unaudited. We're going through our audit at the moment. I think we pride ourselves on delivering the financials, and I think our financials are a testament through this disruption of COVID that we've still been able to deliver these numbers. COVID's has not had much of an impact on us, apart from some small delays on international opportunities. But a lot of our clients are still using our products and asking for more. And because of our focus, you know, we are industrially focused, you know, mining, infrastructure, construction, utilities, telecommunications. You know, we don't have exposure to retail. We're not exposed to hospitality. So sectors that have really been hard hit, Australia and globally, we don't have exposure to. And it may be by luck or by design, but we focus in the areas where at a location or at a site where a high compliance regulation or HSE compliance is required is where we're focused at, and that's shown in the numbers that we've been successful this year. I suppose the other thing to point out that we do pride ourselves, we're a little bit different. We actually like making money while we grow. It's something Christian and I from the very early days have been driven by that, and that may be a function of our backgrounds and also of our age. So we have been able to grow our revenue while generating positive EBITDA and also generating positive cash. We have a view that our EBITDA cash conversion should be, you know, between 90 and 100%, and we believe that we can still grow while we achieve those numbers. At the same time, we still have cash on the balance sheet, and we've been using cash for M&A this year. But that's something we will continue as an ethos for our company, and with Vault that will not be changed. Some people have asked me about, you know, what are the growth drivers, and I just use this one. It's a simple slide from Macro Monitor, and a few other companies have used it too recently. And you could say, and very simplistically, this is a capital expenditure projected out for the next number of years of major transport infrastructure projects. And you can see where we are today. I think anyone, you know, that looks at industry in Australia, you know, we are in a tough time with COVID, but we all know the federal and the state governments will invest very heavily to get the recovery happening and getting the economy going again. And these are the projects that have been identified. And I'm happy to say on a number of those projects, Damstra is already on. Cross River Rail project in Queensland, one which is exploding. The projects in Western Australia, the rail projects, obviously the F6 extension, etc. So we look at those projects and we're on a number of them, and we hope to be on more of them. So that will be a big underpinning driver for us the next couple of years in Australia. Having said that, a big focus for us, as I said earlier, was international. Our revenue at the moment is about 25%. We have a number of clients internationally. Newmont is a great success story for us. You know, we have presence now in Africa, North America, and obviously Australia, and we have some 20,000 users using our particular product. As I said earlier, we have products in Asia, and we have some trials happening in the UK. We are resourcing up very heavily in the US. There's two major appointments that we've recently done in North America, and they're both going very well, both John and Bryce, who I know well, and that's something we'll continue to expand. People do ask me, how big will international be? And I say, you know, FY22, our international revenue should be bigger than our domestic revenue, and we will resource appropriately. Another thing that's important to us is channel partners. I mean, these names may not be known to Australian investors, but Zavaro and GIA Part of our ethos in Australia is channel partners, and we have a good relationship with Tech One, as some of you may know, where our product is integrated into their ERP system. And we see channel partners, particularly in North America, as a way to get into verticals that we haven't got to in the past. So that's something we will grow. And an exciting thing about Volts, that's also part of their strategy. They have a number of channel partners, and we see that as a great driver of our business going forward. In terms of the focus in North America, it's similar to Australia, except I would say a big, stronger focus on federal and state bodies. At the end of the day, they look at things like land home security, education, etc., where we are speaking to a number of state and federal bodies where our product could be a solution. Obviously, mining, energy is big for us, and construction. As we had success in Australia, we believe we can have success in the US, and utilities. I do say something surprise us. If someone would have said to myself 6 months ago, would we be in the education sector? And I would have said unlikely. But you know, if you have a mental model, I mean, this school that we have in the States, you know, about 1,000 people at the school. The school was very worried about security. They wanted every child and worker and contractor. They wanted facial recognition. They wanted to know who was on site, and then they wanted the temperatures monitored on a daily basis when they go in and out. And that's just something that's opened up for us in the States. And that one school has kicked off a number of discussions with schools across a number of states in North America. I'm just moving on to slide 15. So I did just previously talk about, you know, our results, our drivers, using infrastructure as an example, and looking at international. And then I talk a bit about what's the combined group looking like when Volt and Damstra comes together. I will say this is for illustrative purposes. You know, continuous disclosure is important for our company, but something we pride ourselves on. We try to be transparent and give high quality disclosure to our investors. And we as Damstra have given some views on FY21 in terms of our potential growth, which we've released. And this slide was used in an earlier presentation. Volt's board have also given a view of what their revenue has been, is going to be for FY81. So at a very simplistic level, if you combined those revenues on a full run rate basis, I mean, we see a revenue range of in the middle 30s for FY21, and some characteristics of that. You know, it's 90% recurring revenue, and the historical revenue churn for both our businesses is less than 1%. So we're excited by the ability of, one, that revenue base, but two, how recurring it is and how we have little churn. We have gone out to the markets in terms of the synergies that will be achieved, and you know, we've got 4 million in here. We expect that to be achieved, and something that we're working through. And we have already started with Volt, and I know Ross, their chairman, very well, and obviously David Moylan, their CEO, and their executive team, and implementation has already started. And this morning we've had our weekly implementation meeting. Obviously we're going through a scheme process, and that booklet will be with the ASIC very shortly, and then after that the process will go forward. So we are looking to complete this transaction in October, and obviously there's got to go and for the Volt shareholders to vote for this transaction. And I think most of that detail is being already shown by Volt and ourselves in terms of the scheme process, but things are going very well. And so I think it's important for Damstra shareholders and also Volt shareholders that the management team of Volt are very aligned and very excited by the journey to be joining Damstra, and implementation has already started. Cash on balance sheet, I mean, people did see the Volt 4C, which I know the chairman and CEO of Volt won't mind me speaking about. I think that gave investors some confidence when their cash receipts were around the $2 million mark, and their cash burn was actually reducing. I had a number of investors ask me, have you done your due diligence? Do you know what you're getting into? And we got great visibility. So we were positive that the markets were able to see when their 4C had come out a few weeks ago, but the cash is coming in and you can see the business growing.
Sorry, Jan, just to interrupt there, we've only got a couple of minutes.
Yeah,
sure. Couple of minutes remaining, so we might sort of whip through the rest and then try and answer a couple of questions if that's cool.
Yeah, no, I only got 2 more slides. One is this is Volt's slide that's talking about their revenue, good growth, and what their board has said for revenue for next year. And go to slide 17. This is what really excites us. The enterprise product is a bit like Damstra's product in some areas, but the solo product. When I was talking earlier about access control, monitoring, contract tracing, where clients want this product to be taken to, this is the exciting part of this transaction. By combining Damstra and Volt Solo, we extend our product very, very deeply. I've only got 2 more minutes left. I think I've spoken about a number of these. I mean, acquisition, slide 18, client numbers, large scale, financials I've spoken about, diversification of revenue, big investment in R&D resources. I won't touch so much on slide 19 because I think I've spoken about that. Slide 20 is about channel partners. I mentioned that earlier. I mentioned the ones in the US, the ones in Australia already have, and the ones that Volt has. You can see those names there. They're serious names. This will be part of our growth strategy. And then to conclude quickly on M&A, I'll just to look at the top left-hand slide, which I'll talk more about in our full year results. We only do it for 3 reasons: products, people, and is it commercialized? Is the product good? Can it be accelerated? Are the people good? Can we retain them? And has it been commercialized? I will finish on the last slide, as I know I'm running out of time. We spend a lot of time on this. This is integration. We just don't land grab. We have a defined process in terms of each of the areas. We have a project team, we have a DD process, and we integrate hard. And we're really doing that process with Volt. So that's just to give investors that we have a strong methodology, and we've disclosed this, and I think we disclose more than what other companies do. So investors can actually see when we buy something, how are we running it. We don't acquire something to have many companies inside of Damstra. We have one seamless company, and it's all driven by product. I'm conscious of time, so I will stop there because I know there may be a couple of questions.
Great, thanks, Jan. Certainly the confidence sounds like it's coming through, the methodical approach. First question from John O'Higgins at Shaw's. Where should we expect the delta to come from in the US? What sectors, companies or channel partners, and how much would you expect your North American sales resources to generate per head?
Hi, Jono. You're asking 4 questions there. I'd suppose I'll reverse the question, Jono. I'd say my FY22 vision is that most of our revenue should be international, not domestic, and that's our pathway. And then consequently, we will resource appropriately to achieve that. So we've got a team there and got more people on the ground. I think if you had to say what's the win versus what's a channel partner, interestingly enough, John, I think it could be 50-50, or it may be 75-25. But we see channel partners being an exciting venture. I am obviously got exposure to some RFIs or RFPs were responded to, and one case in point, there's one that we put in last week, which I won't disclose. This is for a competitive process where we were going with one of our channel partners, and the size of our offering was large. Their offering was larger, but we bid jointly. So you could evolve, Jono, where a significant portion of our revenue is done with channel partners.
Great. We might have to cut it there, Jan. We've had a number of questions come through that we will get back to on the other side. But thanks very much for making the time today, and thanks very much for the attendees for joining. I might just pass it over to you for closing remarks, and we'll finish there.
Yeah, thanks everyone. I hope you got a flavour of Damstra, and we've had a good year last year. We're really excited by the Volt transaction, and importantly, we're excited by the product, Solo in particular, and we're excited by the management team being part of Damstra. And then we see that we're going for a transformational business this year, and we see the potential growth for our business, but at the same time, delivering the financials that we have in the past. At the end of the day, we pride ourselves on growing and being profitable at the same time. So on that note, I'll call